The FDIC came out with a report that there are 63 regional banks that are now in trouble. They're keeping the list of these 63 banks confidential, but let's go look at the report. So if we look at this article right here, this is from the FDIC website, the number of banks on the problem bank list, those with Camel's composite rating of 4 or 5, increased from 52 in the fourth quarter of 2023 to 63 in the first quarter of 2024. The number of banks represented a 1.4% of total banks, which was in the normal range for non-crisis periods of 1 or 2% of all banks. Total assets held by the bank programs increased from $15.8 billion to $82.1 billion during the quarter. So if we come over here to Investopedia, we look at what the problems banks list is. It's confidential, so we don't know what those banks are. But it's published by the FDIC every quarter, and it's those banks and thrifts that are on the brink of financial insolvency. So if we think back to March of 2023, when things kind of hit the fan with Silicon Valley Bank, First Republic Bank, there were a lot of regional banks during that time that really struggled and frankly went under. And the people that were invested in the bank, shall we say, they were backed by the federal government, which was, I don't know how I felt about that one, but I feel like if you have your money in a bank, you know the risk that you're taking. You know the insurance that's there. You're insured up to $250,000 per account with the FDIC. If you have more than $250,000, maybe you're in some trouble. There are some banks that go a little bit higher, but you shouldn't have $2 billion in it like where it was in Silicon Valley Bank in many cases. So that is what we're seeing right now from the FDIC. And where banks go is typically where the markets go. So going back to this article, in conclusion, now it was only 1.4% of banks, so we have 9,500 banks or something in this country. So in conclusion, they basically said, the banking industry continued to show resilience in the first quarter. However, the banking industry still faces significant downside risk from the continued effects of the inflation, volatile market interest rates, and the geopolitical uncertainty that is going on right now. These issues could cause credit quality, earnings, liquidity challenges for the industry, yada, yada. These are probably things that they say in every report. But when I see something like 63 banks, yes, it's 1.4%, but we've had this coupled on top of last year, which is when we had bank problems. That is what starts to worry me. So what does this mean? Well, it probably means there's going to be more bank failures out there. So that brings the question, what do you do? Well, you just make sure that you are in banks that have FDIC insurance. And I wouldn't worry about the big banks right now. When we're talking about places like JP Morgan Chase, Goldman Sachs, Bank of America, I'm not worried about those. I don't think that anybody should be worried about those at this point in time. But when it comes to these smaller banks, you're going to run into some issues. Banks are going to go under. Do banks routinely go under? Yes, that's just a part of the banking system. But when you put all of these things into the pot or into the cake that we're baking right now, if you think about the loans that are out there, especially in commercial real estate, there's some really bad loans out there. People were getting interest rates, variable interest rate loans that were 0, 2, 3, 4, whatever percent when rates were at 0%. And now we have rates that are sitting at 7, 8%, maybe even higher than 8%. When it's a variable rate like that, maybe they didn't factor this in. Maybe they didn't think interest rates were going to climb this much. When you think about the credit card debt that's out there, you think about, hey, maybe people are not going to be paying these banks. Let's go back. Let's look at this list and just show you in 2008, 2009, banks that went under. And here's the date that they went under. Bear Stearns, big one. But if you just look at all of these little ones, Missouri, Arkansas, Nevada, Florida, Kansas, these are West Virginia. And we just scroll down the list, Washington Mutual, that was huge. And you just continue to go down this list. That's 26 banks in 2008. Then you come over here into 2009. 140 banks failed in 2009. This list is just astronomical. I'm sure that a lot of you that are watching this video that live in the states that live more in the center of the country, you're probably recognizing a lot of these banks. And look how many there are. Even in 2010, 157. You just go down the list. Guys, banks are going to fail. Think about it this way. In the US right now, we have about 9,500 banks. We are, I believe, the last country that has almost a regional banking system. The majority of countries out there have a system that is controlled by 9, 10 max banks. So what they would basically do is these big ones, JP Morgan, Goldman Sachs, Wells Fargo, et cetera, would take over the regional banks and kind of put them inside of their hub, and they would just become their banks. And that is a way, it's definitely a way to stabilize the system. Now, if something happens to those big banks, all hell breaks loose. But it is a way, the argument is there to do that and kind of take over the banks, almost nationalize the banks without nationalizing them. The federal government wouldn't be involved in it, I guess. But that is kind of the direction that I think the more you start to see these bank failures happen, the more things start to go in that direction. Now, with that being said, 9,500 banks would be a lot of banks to kind of take over. It would take a very long time to condense those. But when you start seeing bank failures like this happen in 2008, 2009, 2010, then you start seeing it happening again in 2023, 24, 25, whatever the number is. There is going to be stronger arguments for a more comprehensive takeover of those banks. So guys, if you like videos like this where we talk about these random economic issues like the banks, also we talk about stocks and individual stocks, report earnings, subscribe to this channel, and I'll see you on the next video.